Looking at a messy and volatile decline from here. In mid-August highs heading towards mid-October lows is what Gary Glover had put forward, and he's been on the right side of these timings since the start of 2022. Last week he signalled it was a critical week for the markets, and here he is now to talk us through the latest charts. Good morning, Gary. How are you?
Yeah, no, I'm good, Chris. I'm good. Yeah, no, it's last week was a really important week. So just some really strong short-term timings there to be concerned about, just some levels to be concerned about. And yeah, I sort of, for me, that was a bit of a critical week last week, and that was really going to be, just to sort of see whether we'd get a clear message or not. And, to be honest, I think the market has spoken in a pretty clear and pronounced and I think we've got our signal there. So I think we've had that really decent rally there. Sometimes the bear market rallies can push a bit further. So it has maybe gone larger than some of them in the past, probably larger than the most recent ones. But historically, it's not unusual to have a rally like this. But hit our key timing. Yeah, we've probably started to see a few distribution days as well, Chris. Sort of prior to the top here, so starting to see a few down days on heavier volume. I think probably seen a few more NASDAQ distribution days. We've seen a few on the S&P500 now. So pretty negative sort of price action there last week, particularly obviously Friday night. It's funny how sort of, just felt like everyone, sort of Friday night there, sort of, I have positioned on the bearish side there, probably not, as hard as I would have liked there, but the market was running up into Jackson's Hole. It was sort of really thinking the best, and so the market was sort of getting, was thinking the Fed was going to lighten off there, which just sort of made no sense really, because all the data is pretty negative. Inflation's still pretty high. So, the Fed's still so far behind the curve here. So, sometimes I just wonder, markets just get excited here. That's why sometimes you got to be, it's not, you got to watch how markets sort of trade into key events. Oftentimes, it's like the banks sort of reporting, and sometimes when there's sort of markets can rally into good news, you have two things can happen there. You can get the good news and the market can go down, you can get bad news and it can go down. So you can still get both scenarios there regardless of what the news is, because the market will anticipate that good news and then buy the rumor, sell the fact. And then if it doesn't get what it's after, then it'll get hit even harder. So yeah, no surprise to sort of see us, market reverse pretty strong after that Jackson Hole meeting, the way I view it here. So the big question now, Chris, is what sort of decline are we going to get here?
Well, I'm glad you've preempted that question, because that's a good thing to pull apart, have a look at the charts and sort of understand. And I know you've got a great chart on the cycles of the Dow Jones where we can sort of look through that. But the ones that I noted during the week, you said to clients that you were picking up some short, since we last spoke, I should say, you were picking up some short of the NASDAQ and some BBUS. So they're bearish ETFs that you're picking up throughout the week. You've kind of spoken about the NASDAQ in this chart and how it's behaved. Was there anything else on the S&P that was helping indicate that, or it was just like you're talking about coming into Jackson Hole, it was just kind of price for perfect response from the Fed, and that was the timings all lined up? Is there anything else that was catching your eye?
Yeah, no, the only thing with the S&P was that it did actually hit the top of the channel there. I think the 200-day moving average as well. I think a lot of people were talking about that. But yeah, we just got to, it was sort of, I think it wasn't showing as many distribution days as the NASDAQ, but we've definitely got our reversal there and follow through there. So even if it was only half the follow through there, it would be negative. The fact that it's come off as hard makes it more negative. Pretty impulsive move down there. So pretty clear sort of signal the way I look at it here. Can still be a bit messy here, sort of looking at how come off the highs here, and can still get a little bit of congestion there. So we'll probably get you might get a couple of small up days, a retest down, you might get a lower right shoulder. But yeah, I think after, maybe, the next week or couple here, I think you'll start to sort of see this move down here. Yeah, I mean, I was sort of thinking last week that because of that size of that rally there, that maybe we'll just get a lower high rather than a new low. But the impulsive nature of that move on Friday, does maybe think, oh, okay, this could easily go to a new low based on how aggressively that dropped there. And but yeah, it'll be a bit messy here. But yeah, I guess originally I thought maybe the Aussie market is more of a value sort of market there, so maybe we'll hold up a bit better, whereas the US market, being a bit more growth there, will come off there. But there's a lot of stuff going on around the world there, which is in conflict to markets, and markets have been sort of really dismissing it. The fact that we've got 8% and 10% and 12% inflation readings there is pretty scary. The fact that the Fed is so far behind the curve. What's happening in the UK around energy prices there. You've seen, got these soup lines, buddy, in Italy. We've got all these floods in other parts of the world here. There's, some real troubles globally here across the region here. But the equity markets have really dismissed a lot of that here. So, yeah, some of these pains could potentially come home to roost here. I think there's some real fears out there which could drive this market down here. So, yeah, we seem to have sort of dismissed them all, but the market's like, we'll sort of go up and be blind to them all, and then I'll start heading down, and everyone will start looking at what's really going on, and then I'll get too negative. I'll, kind of recession and depression and talk, and that'll be sort of when we should start to be coming back in the market again. So, but there's definitely a few things out there which could potentially sort of give this move some gusto here. So yeah, just got to be a little cautious there. But yeah, I think we're looking for a sort of an early to mid-October is the right timing here. So we'll just see how this unfolds here, just see whether we got some strength or not. I mean, the beauty for us is we're probably in the best market in the world, Chris. I mean, our economy's probably reasonably resilient. Commodities are pretty buoyant, so that's helping. Compared to what's happening around the globe here, we're not suffering anywhere near as much. Obviously, inflationary pressures are a little bit less than some of the other regions as well. So, we're very fortunate to be in Australia at the moment. So, so I think that's probably good for our equity market overall.
Well, that's positive, and it fits in with what you were talking about 8-10 months ago, saying that you believe the Aussie market would fare better for sort of a few other reasons, of the composition of our market, the type of companies that we have, the leaders, and how hard they did or didn't run in the last rally. But how you came to those sort of that roadmap that you laid out at the start of the year with the timings, sort of the mid-June lows, the mid-August highs, and then now the October. You've mentioned many times the 60-year cycle, and this week in your report, you've got the Dow Jones chart and you're talking about the 60-year cycle. Can you maybe explain what we could possibly expect after the next milestone, which is looking for a mid-October low, and how that fits in with the 60-year?
I can do, but I could probably just do something better, Chris.
Okay.
I can tell everyone just to go and get a long-term chart and look at every midterm year. Look at October. I think we've got some charts there, so maybe I'll bring those back next week. But just go and look at a midterm year, every midterm year, every 4 year. Look at the market, how it pulls back, and then look at what happens after those periods. It's quite an amazing phenomenon. Look, some people, don't believe in cycles. Don't believe in technical analysis. They just use fundamentals and stuff there, which that's all fine. I mean, at the end of the day, as traders, we're gonna basically trade our losing trades to someone, but the cycles, some of the cycles can be really dominant, and others can be sort of less dominant. But this year is definitely one of the more dominant cycles, and the 60-year cycle, it can be really on, or it can be really, it can be off as well. But when it's on, it really can be, can be so valuable, and it has been this year. And so when you're on, you've just got to respect it here. So this cycle's been really dominant this year. It does help if all the other sort of cycles are all matching up as well. So when you get a year where all the sort of dominant cycles are all saying something similar, that's very respected. And that 60-year cycle has been absolutely bang on the whole year. So again, got to be respected here. Look at that midterm year. Look at October lows to midterm years. Just go back and look every 4 years. I mean, that, don't take my word for it. Go and get a long-term chart. Dig out the Octobers every 4 years and look at those lows in there. Look at what follows those lows. That's, again, don't take my word for it. Just look at what happens historically. So some big moves sort of follow. So yeah, it's an interesting year here. So far, 60-year cycle going to script, and if we must respect this cycle. Those are my last words there on the we have to respect this cycle. It's been bang on here so far. So
that's maybe some homework we can have for the listeners. If they find a 60-year cycle or a 4-year chart that they like, they can post it in the comments and we can see, as you say, that don't take your word for it. They can go and have a look at it. We can see
You just got to be looking for the price action as well. So you got your cycles and stuff there. And sometimes you got to take them with a grain of salt. Some years they're not as dominant as others. And then you also got to look at the price action as well. Is this, if we've got a bearish environment here, obviously high inflation, got some real concerns sort of globally, and we've got a trend that's heading down here into that window, then what we're looking for is a reversal. We're looking for the ideal, So if everything starts to sort of show us what it should be doing, then we've got to go with it. So far, this has sort of led the way. It's shown the path. It's given us reversals. It's done all the things technically that you'd expect here. So so unless it starts doing something different, or starts sort of showing, the price action starts sort of doing something it shouldn't be doing, then that's when we don't listen. That's when we sort of got to question it. But so far, there's been no reason to question this cycle at all. The price action has been on the money. The environment's on the money. So it helps when everything adds up and points to the same direction. So it's
they're good insights as to how that timing's come about. But as you've said, and as this report shows, it's just been bang on this year. Probably a good time to move to some of the trading shares and the opportunities that you're going to be watching in the days and weeks ahead. Macquarie, big concern there. So on this chart, you've kind of got a downward channel, and it looks like it's conforming to that sort of downward resistance there. So what are you looking at in Macquarie here?
Yeah, so I was just looking through a lot of stocks there the last week or two, just sort of seeing, whether, are we going to get the reversal here? Are we going to get a bearish up? Are we going to get another leg down? Could it be bigger? All those questions there. That's where you sort of start looking through some of the majors. And the concern there is, these sort of charts here, obviously, Macquarie's had this sort of upward channel there. So it sort of overshot that originally, and then it sort of tipped over. So it had the biggest correction of the entire move here. So like an overbalance of the trend. Now we've broken through the bottom side of that trend line, and now we're sort of starting to build like a downward channel here, which is a little negative here. The key thing here really with this, apart from overbalancing the trend and getting a series of lower highs and actually starting to build a downward channel, is the volume profile. That's the killer for me, is that we really saw some pretty aggressive selling off that first right shoulder, and then we've had a bit of a bounce there, and the volume's been pretty light. In the last couple of weeks, it just really dried up again. So again, just classic sort of negative price action. That's the sort of price action we saw when BHP, Rio, for $100 and $50 top of the commodity cycle. We started to see, the first leg down was heavy selling, a bounce on light volume there. So some negative sort of technical picture there, some of the majors there. So got to be concerned by that volume profile. That's pretty negative there. So again, don't take my word for it. Go and look at BHP and Rio 07, 08. Just look at what happened there off the peaks. Look at the volume profile from those periods as well. It's not too indifferent to what this looks like here at the moment for quite a few stocks here. So I'm not as negative as that period, but the volume price action, the channels here, the overbalance there, the weight of evidence is pointing to a leg down here. So I mean, that, for Macquarie here, there's a good chance we come back to test that old high, at least at sort of 150 odd there, and potentially maybe we might even come down to that 50% level, around 144. So yeah, so we'll see what happens here, but that looks pretty negative for mine here. So yeah.
Well, another one you've picked up is one that's a pattern that's been getting a lot of coverage in the last couple of weeks and months, is the 0, 1, 2, 3. Now it's at the top of the pattern, where a lot of the ones you've picked up in the last few months have been the bottom and very successful trades into the rally that we've just seen sort of roll over. But this is at the top. So what's this 23-week? Why is that important here? Yeah,
look, it's probably not major important there. Probably more important is to sort of see those series of lower highs there. I just oftentimes look for sort of cycles. Oftentimes markets will sort of, the amount of time where you sort of rally from high to high or high to low, that can sort of give us some timing to watch. So a lot of stocks have sort of hit some sort of shorter term cycles and turned here. So I just noticed that from the high, the first little ABC down, 23 weeks, and then we've sort of rallied and then declined and then rallied back up again 23 weeks. So a bit of timing there to watch for. And then we've got another lower high here, which is negative. And again, the biggest thing on this thing is the same as the volume profile. Again, Chris, as well. I mean, look at the volume on that leg down, really heavy selling down there. And then the volume that's come in here on this rally here has been quite a lot, really, really weakened off here the last couple of weeks into that high. So that's, so now we've sort of had this, 7-8 week rally, and then we've turned down and the volume was almost double first week off the high here. Just heavier volume straight up here off the peak here. So that's sort of, first lower high here. Since then, we've obviously probably come back a bit lower here. But again, we're just, just starting to see, seeing a lot of distribution type sort of characteristics here. So just, a lot of stocks look like this. So not exactly on the 23-week cycle, but all the other ingredients looking there, we've definitely got a series of lower highs. We've just got a bearish sort of volume profile there, and seeing this rally here lighten up on towards the high here. So, and we've just turned down here. We've basically just got a bit of a bearish reversal in here. So the last couple of bearish reversals have continued down in a relatively aggressive manner here. So got to be careful.
You've also picked up 2 healthcares, and this is kind of interesting because they seem a bit different to what you're talking about. Ramsay kind of big channel sideways. It had the pop up that you spoke about a couple of months ago, and then that bid was withdrawn and sort of faded back. But it seems different. Why are you looking at healthcares at the moment? Yeah,
just sort of holding up here quite well. So just sort of stabilizing here. It's a sector I do like. I just sort of think this sector is going to come to the fore here. And I expected it to sort of have a bit of a not so great. Yes, I expected some of the companies not to report so great, but I think the outlook for them is going to be a lot more positive there in the next couple of years. We've got a lot more buoyant there, just because there have been so many restrictions there, and that should start to unlock a little bit here. But the price action is sort of interesting as well. So it hasn't been too much volume here on the way down here, so it's been pretty light on the decline there. And look at the last probably 6 or 8 weeks there, we just really choppy sort of sideways orientated there. So so I just think it'd be interesting here just to watch this, in the face of a weak equities market, see if it can hold here. If it can sort of show some relative strength there, then it's definitely a sector to watch here. So to me, it's just sector I'm watching pretty closely there. This one has been, obviously, it's got some corporate, had a, not going to say a pretend bid, but not
non-binding.
Not a real strong sort of, so non-binding. So it's obviously sort of, it's just give me a look at your book sort of thing, But look, maybe there's something corporate-wise, but I mean, at this stage, I still like the sector here. I still think this will be a sector to be invested in, but just interesting so far. We're showing a little bit of strength there, and the sector sort of showed a bit of strength as well. So Sonic was the other one that I've it's shown a bit of strength as well, and then and then even Healius as well is sort of, again, just been sort of hovering above that 50% retracement level so far, just showing a little bit of support there. Just be interesting to see how this goes in reporting season there, but yeah, any weakness in my mind is, these things probably, I'll be looking at, maybe to, try and pick this up in a little bit of weakness is my sort of view there, but I'll be watching them pretty closely over the next sort of few weeks.
Right. So what you've seen is it sort of sold off heavily into these lows, had a decent amount of volume, and while it has rallied mildly, the selling kind of depleted. It's just sort of churning sideways, and that's the relative strength that you'd be looking at in the weeks ahead, is to see if this maintains while the rest of the market falls away. Would that be a positive sign for you?
Yeah, no, that's 100%, Chris. Yeah, 100%. So basically, you've seen some good volume come in at the lows there. And yeah, if the market sort of weakens off here and we can sort of show some strength versus the rest of the market, then that'll be perfect. So it's a bit of a wait and see here, but I like what I'm seeing already so far. But yeah, if the market does continue to weaken off here, like I think it will, if these can sort of continue to hold here, then that'll be really positive.
Who knows? We might see it in the launch pad in the weeks to come.
Yeah.
So, another one that you picked up is a different sort of industry. When we look at Qube and look at this chart, you've got some channels that I'm sure you'll explain, but it seems as though this chart, it's almost like it's been left behind when the rest of the markets have rallied. And I can see there's a big move just recently in the last week, obviously related to earnings, but has it kind of been a bit of a left behind in the last couple of weeks and months rally?
Yeah, I just sort of like it's like it is sort of it's a bit negative here. It's obviously broken down here. So obviously like Macquarie, it's broken down and made a lower high and then gone to a new low, and then it's sort of rallied again, another lower high, and then it sort of declined again. But that next decline was really hard work. That last leg down there just took a long time to actually get down there. So the speed of actually heading lower is sort of getting slower and slower. So it's basically taking a lot longer to get to that last low here than the previous one there. And then we just sort of popped up here out of that range there, a bit of volume there last week. So just starting to show a little bit of strength here versus, again, against the overall market there. Just popping out of that range is a bit of a show of strength as well. This is more of a bit of a sideways-y sort of decline here. So let's say Treasury Wines did sort of something similar there. Just had more of a sort of a sideways-y sort of what I call a corrective decline. So if you look at that sort of move there, it's pretty much a sideways move. All the highs and lows are all sort of overlapping. So there's not, we're not breaking down and then sort of sitting below the previous swing high. We're basically bouncing back up into the range again and then bouncing. So each new low, we're only just going marginally lower each time. We're not really following through. So we just go marginally lower, So it's not really sort of selling off here. So again, this is probably one you want to probably watch and see how it trades here. But so far, it's showing a bit of relative strength there. If this sort of congests in here and it starts to sort of break up here, probably want to sort of see maybe a break to go above a swing high here, break a little swing high. So maybe this little high here, maybe it'll just ease back in the range or track that channel down. If price could tighten up, it'd be even better, like a little coil. And away we go here. So just things to sort of things to look after here, and then hopefully it looks all right. So I think that looks pretty positive. Just want to see a bit more price action there, but yeah, so it looks going to be tough trading here, I think, for the next 4 to 6 weeks here. Probably more important not to lose any money, as we sort of spoke about. Just controlling your risk here at the moment is probably more important here. So just going to probably try and get a few more hedges on here. Try and make some money on the downside. Again, it'd be a bit messy. Could take a bit of time here. I don't think it's going to, I wouldn't go as hard as we sort of went early in the year. But yeah, hopefully some stocks, some stocks might sort of be able to rally as well. But this will be the next sort of 4 to 6 weeks is imperative, Chris, that we go and find the next leadership group the bull market there, because coming out of October, there could be a pretty decent rally. We don't want to be on the weakest sector. We want to be on the strongest stocks coming out of that move. So the next 4 to 6 weeks is all about doing the homework, setting the foundations for end of year sort of recovery. So yeah, just got to be trade lighter here, trade a bit smaller here, yeah, set ourselves up for the rest of the year.
That's a good point to note, that if anyone wants to talk portfolios with you, understand and sell calls, like when you've been selling calls for clients in the last couple of weeks, adjusting profits, profit targets or stops, and also getting on the bear side and picking up those bearish ETFs like you did before the market fell away. They can contact you on the details on screen, can't they?
Yeah, perfect.
Very good. Well, thank you, Gary Glover from Novus Capital. And if you want to see Gary's videos where he talks about launch pads and dissects charts, it's on the right-hand side, and also this playlist is also on the right-hand side.